Testing, testing, 1, 2, 3. So, starting a little bit early, get some disclaimers out, and then see who shows up if we're gonna get going. And as usual, I will stay on as long as people show up and people are interested in asking questions. So, no trade calls, no recommendations. Every response for their own stuff. We're here for educational purpose only. 21st of December, 2021. No trade calls, no recommendations. Response for their own stuff. We're here for educational purpose only. So, guys, if anybody's around, you can start asking questions. I will tackle questions as they come. And again, this is the 12th time we're doing this year. At the beginning of the year, I committed to doing a live Ask Me Anything session where we could review markets and I could take questions every single month. So this is the last one of the year. And again, happy to hang around as long as people show up and do this. Not sure if I'm going to do these next year. I don't think it's that, haven't had that much interest, so I committed to doing it, so I'm doing it, but we'll have to see about next year. So here, one of the main things I would say to anybody that's trading is just really to be careful because the last 2 weeks of the year can be very, very funky. You know, essentially no trading on Friday, funky action, even less liquidity next week. You don't want to read too much into the usual cross-asset correlations. Keep in mind that there are just a lot of flows going through these last 2 weeks. There's less liquidity. Most people have already finished up their year. So really, there's not an awful lot of edge. There's especially not an awful lot of edge in trying to trade very, very tight, inside tight ranges, especially when you're outside of the more liquid times of the day. If anything, you tend to get some opportunities into New York Open, into New York Close. But, you know, the rest of the time, it's fairly dead, especially the EU and Asia sessions. The other thing, as you've seen on Turkish lira, you know, everybody's a hero until you get a headline that blows your account. It's very, very tricky to trade these situations. And especially if you're not on a good broker or if you're trading on leverage, it's just a recipe for disaster. So usually, most often than not, you do not want to try and make your year in the last 2 weeks. And you don't want to try and save your year in the last 2 weeks of the year. If anything, you want to hang around and see if there's any really interesting opportunity, any massive dislocation, or if there are some specific levels which you are interested in and you're trying to pick up some kind of swings. You know, maybe you're trying to position yourself for some kind of seasonal trade into the back end of December. You're trying to position yourself for some seasonal trade into Q1 next year. Then, you know, you may try and take advantage of these dislocations to get a decent price by having some kind of bids or orders in the system at silly levels. You might just get filled, right? So that's what I would say. Hey, Debbie, how's it going? How's it going? How's it going? So with all the noise, what additional charts do you suggest an FX trader have on the screens and to see? I mean, here, really, I was discussing this today in the daily webinar. You know, FX vol has been fairly dead, and it's very, very tricky because there's just not that much going on, right? Hopefully next year, if we start to see different different central banks moving, it could be the year where finally FX picks up again and we get more opportunity. But, you know, there just hasn't been that much going on, and you know, it's tricky to trade these environments. This is why this goes back to one of the things I've always said is, if you spend time, you know, hours, effort, etc., blood, sweat, and tears trying to internalize trading concepts, trying to internalize price action, I think it's a shame to limit yourself to just trading one asset class or one instrument, right? Of course, different instruments, different asset classes have their own character and their own quirks, and it makes sense to be specialized, or especially in the ones you trade the most. But really, apart from some very specific things, the work you're doing is very transferable to any other instrument. So I think it's as always, you want to have liquidity, right? And you want to have liquidity and tight spreads, right? And if those two conditions are met, then you should just be willing to trade anything, right? So, because what that happens if you just limit yourself, I only trade Euro, I only trade Bund, I only trade yes, I only trade DAX, you might go through periods where essentially you're technically unemployed, right? So I think it's important to be ready to focus and trade any of the liquid instruments. Then, having said that, that doesn't mean that you can't. Of course, as your question is, you want to look at other things to give you a feel for the market. But one thing which I would encourage most traders, especially the beginning, is to just focus on one chart at a time and just let the levels guide you. Okay, to answer your question in a broad base, right, and not to chicken out, is of course you'd want to keep an eye on what's going on equities. You want to keep an eye what's going on in bonds, what's going on in across the board to give you a feel. But a lot of times, and especially when markets are thinner, or in holiday periods or into month end, quarter end, when specific things are happening, the cross asset correlations can give you, false messages, right? And especially if you're not really aware how these correlations tend to work and how correlations can change, right, on a dime, depending on what the regime is or what's going on. A lot of times those things can catch you off guard. I mean, the easiest thing I can tell you is really, let's see, to give you kind of like a matrix of what I would be looking at really is, well, a good place to start is, how we have the MT4 setup, right? And here essentially what you have is you've got, ES, YM, NASDAQ, crude, silver, gold, and then you have the main FX pairs, okay? What I would do really is just, what I think it makes sense is, ES, YM, NQ, and I probably replace this silver chart with RTY. If push comes to shove, you could just look at ES or NASDAQ, but I like to look at those. I would keep gold and crude. Now, in terms of the other things is I would keep USD JPY, I would keep Euro USD, GBP USD, Aussie USD, New Zealand USD, USD CAD. And here what I would do is essentially I would replace these funky pairs in Swissy, because essentially Swissy is dead if you had to. And what I would have is basically DXY, Bitcoin, and maybe the VIX, right? In terms of what most people will look at, right? So I think, and this is something which I think, especially for the traditional guys who tend to trade forex, this is probably not a bad change. Personally, I think there's a huge component missing here, of course, which are the bonds, and I think you could probably get away in a more traditional way in just basically looking at something like, instead of BTC, scrapping that and looking at ZBs, and then instead of the VIX, having ZNs. That's probably another way to do it. For the 30-year and the 10-year. And again, maybe you might or might not want to look at the Russell, but these are the things I would focus on. I think these are the most interesting things. Of course, then different people will want to focus on different things, but it's a hard one. I mean, you can also do it looking in terms of looking at the ETFs just to get a feel. You can have something like TLT just to get, but this is what I would be looking at. Okay. So yeah, ZB is the 30-year bonds futures, and ZNs are the 10-year bond futures. RTY are the Russell 2000 Russell futures. But since you can't get the bonds or usually the Russell on most MT4s, right? So if you're just strictly focused on MT4, I think you could easily get away with silver, you keep DXY and then get away Euro GPB, all those crosses. I wouldn't bother. Swissy is kind of like fairly dead. That's what I would be focusing on. Does that answer your question? Okay, cool. Any other comments, any questions, anything anybody wants to look at, anything anybody wants to discuss? Well, it doesn't look like anybody wants to cover anything, but I wanted to cover, basically somebody wrote in saying they couldn't attend live, they wanted to look at Euro. And basically Euro here is kind of stuck, right? And not an awful lot going on. We're going into decent seasonals for Euro into next year. And essentially, this is something which is tricky that a lot of people have to, you can do those on TradingView. A lot of people here desperately want the short or the long to play out, and probably the pain trade is for this to just hover here and not do much, right? Just because everybody's on holiday and there's no real important catalyst or no important information, or at least strong enough to break it out of this range. Our base case has been that this is an interesting basing zone, that the breakout and hold outside this zone is probably going to get some decent follow through. And on any closes below here, we'd look for this to potentially flush all the way back into the 110, and constructive basing process here should give us a move back into the 115. So on this initial base here, also because of the way it's been trading, and you see here how we had these buys coming in, holding that 112.50, and basically the thought process, which is still the thought process unless this breaks, also because of the seasonals, is that this is trying to base and we're trying to see a move back into the 115. This outlook is invalidated if we get a day close below the 112, and at that point you'd have to expect this to try and flush. But right here it's just kind of sideways, and you can look at this and see most of the FX pairs essentially are going sideways. They're in broader ranges. So it is what it is, right? It's just a function of the it's just a function of where we are. It's a function of the seasonals. It's a function of everybody going on holidays, and you just have to be a little bit patient, right? Okay. Any comments, any questions, anything anybody wants to look at? Again, I'll stay on as long as people have questions or have things they want to discuss. If not, I'm just going to shut it down. And again, hold on. I had another one. Let me check my email. I had another one I had to cover. My notes. Yeah, I mean, okay, that was... Yeah, Bitcoin, we're kind of stuck here, right? And it's not a super ideal action if you're a bull. And, it's going to be tricky to see through the liquidity over the holidays. Here, we talked about, at the beginning of the year, is a lot of research being out, talking about that Q4 top in Bitcoin, not necessarily looking for the 80% retracement, but looking for that Q4 top. And here, it looks like that's what's trying to hold. And I think the base case remains that as long as we're inside this area, it's very tricky, right? And especially in holiday period, it's kind of like, don't get confused by velocity of move inside range. It really doesn't mean much. If we can stabilize back above this zone, especially, maybe even in thin holiday period, then, this could easily squeeze right back into that 65K mark. But I think here, and this is Bitcoin tends to do this to a certain extent. Once it kind of, you got the 200 flattening out here, it just kind of stalls, and we need some kind of catalyst. But I think if we get a flush below this area we've been discussing, I would not be surprised if the market wants to test, closer to that MicroStrategy cost basis, closer into these lows here, into the 30,000. And, we still got an open gap here on the futures. And so this zone will likely attract, but it's kind of like everything else. We're kind of hovering, waiting for the next big catalyst with not an awful lot going on. So I think here, if you're a structural bear, there's really no reason for you to give up on that view. If you're a structural bull, there's really no reason for you to give up on that view. And I suspect that for new shorts are likely higher and new longs are likely lower. Nobody really wants to get engaged here. So I wouldn't be surprised if it just hovers out. It's just outside of this zone will likely attract more interest. But right here, like a lot of the charts, it's simply not that interesting. Again, all things being equal, most people have already done their year, have shut up shop for the year, have other things to deal with. So it's not surprising that we're not seeing crazy action. But one thing I would say is, especially if you're looking for that Santa rally, I think here, just keep in mind that we're chopping around and not an awful lot is going on. I think if you're really going to see Santa coming to town, apart from the fact that you may just see, the usual seasonal Russell outperformance in this period, I think it's going to be hard to see, as we discussed in the past, we were shorting these 4,700 failures at 4,700. Every time you get these aggressive failures at all-time highs or all-time lows, you always want to give the fade a little bit of a shot because your risk reward is just so interesting. But here, I think that unless you have, because of the way the indices are constructed, etc., unless you get tech really recovering hard, it's going to be tricky for all these indices to really rip. So, you might just see that outperformance of YM and Russell, especially, led by the bank sector, if we're trying to reposition for this change in rates. But here, unless you see Fangman really ripping, it's going to be hard for the indices in general, for the whole market to really start to catch a strong bid. So this is still the control chart I would be focusing on. And especially, unless we get back above this 50-day, this 10-day, this is still, to me, it's still, making lower lows. This is still sell rallies for an attempt of a move back down into the 200. That's the way this is trading shorter term. And if you look at something at ES here, the tricky thing is that any trades here inside the 10-day and the 100-day, this is just twilight zone trading, much to do about nothing. Really hard to read too much into the action there. Same thing on NASDAQ. Anything here, it's just really hard to read too much into the action. And if anything, you'll see an outperformance of YM and Russell, and you see YM is already stronger. It's held the higher lows. It's holding the 200. The 35,000, 34,000 was a strong support zone. So, we had some tactical shorts here flat on those. And if anything, this could outperform. Russell is still trading a little bit like death, but especially because everybody's looking at the seasonal effect, and for it to outperform, watch how it closes around these spikes and around the 10-day. If it can get above and get some normal, then don't be surprised if into the end of the year it tries to rip back to that 2,300. If there's something, most people learn the hard way, is you don't want to grind higher market into the end of the year, and you definitely don't want to fight small caps into the end of the year. Whatever way they're grinding, you don't want to fight them. So that's just something I would be keep in mind and be very, very careful. Don't get yourself in trouble. It's just not worth it. Okay. Any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Don't be shy. Now I'm going to have to shut it down. Well, it looks like it was a date, me and you, Debbie. It was fun seeing you. Thanks for the question. I hope that was useful. Again, if you have any other questions, don't hesitate to email me. That's pretty much it. So again, this year, as I said, I'd committed to 12, once a month, but as you see, not a lot of people are showing up. So there's no point doing these. Next year, I might post some videos. I'll see what happens depending on the feedback on the blog too. But, let's see what happens. So again, wishing everybody awesome rest of the year, super holiday season, and a great 2022. And again, all the best. Thanks for stopping by, Debbie. All the best. Take care. Bye-bye.